Hey everybody, how you doing? Welcome to Stock Market Live today. Welcome to Stock Trading Pro. My name is Pete Renzulli. We have a lot to talk about today. Hopefully you watched last week's video on last Tuesday when we came back and we talked about the market rallying last week. All of the bad news was kind of out of the picture, short-term bad news. The Fed came out, raised rates, CPI data was bad. All that got priced in. Stocks got pushed down and we felt pretty good that we were going to have a rally last week, and we did. Now, we said it was for the week. We didn't say that the entire bear market, the stock market crash of 2022 is over. All of that is still on the table right now. But here's the difference between somebody who gets paid and somebody who looks at the stock market and says it's impossible. You have to trade with the tape right now. The current tape is going up, and you have to make decisions on when that will change, if it changes in the short term, and how long you hold your profitable trades. That's really been one of the biggest challenges for members of our boot camp, especially right now, especially new members coming into the community, is understanding the market conditions of when you buy stocks and how long you should hold them. It's kind of like the eternal question of, have you ever gotten out of a really good trade too soon? And have you held a good trade too long? That's the thing. And that's actually what you're going to really need to do to break down different market conditions, set up different initial profit targets. So we have a bunch of stuff to talk about today. We're actually going to do a little bit of a dive into this sector rotation. You can see Friday was just absolutely amazing. The week was still pretty good. Energy took a little bit of a hit, but the big thing I want to talk about is following the tape and following the order flow. And especially last week on Friday, we had a lot of people on the day trading side of things, our day trading community, which is pretty active, talking about Friday. Stocks are going sideways, nothing's rallying, but, and this is kind of an advanced thing that you really want to learn. It doesn't matter if it's day trading stocks or swing trading stocks. You can't fight what's going on. It's never too high and never too low as far as where it can possibly go. So on Friday afternoon, probably from 1 o'clock to about 3:45, I kept saying there's no reason to be doing anything other than expecting a rally into the close. The VIX reading was near the lows. The tick readings were all positive, and across the board in major sectors, we were also positive. So that sounds obvious, right? But when you see those kind of things, you have to hold on to the good trades, because it's those good trades that pay for all those annoying losses. So we're going to jump into this week's trading. Here's my forecast for the week. We actually got a question, which is a great question, by the way, on YouTube last week, in reference to why don't I review ideas that happened already? And I think it's a pretty good question, quite honestly, because people want recaps and that kind of thing. But I want to make it clear. I think one of the things that we do differently is I want to help give you ideas that you can trade today, not what happened last week. So I understand why people want some recaps once in a while, but I feel like I'm giving the most value when I'm telling you what I'm looking at for the current day, the current week, the current month going forward. So then you could do a little bit of research and determine whether or not those ideas are perfect for you. So we got a lot to cover today. Stick around. I'll be back in just 1 second. Okay, so thank you so much for being here with me today. I really appreciate it. Stock Trading Pro is growing. We're almost going to hit 25,000 subscribers this month. We should do it within a couple of days, maybe even today. If you haven't been here before and we provide some value, do me a favor and make sure you smash that subscribe button. One other thing is I want to remind you that coming up in about a week and a half, 2 weeks, I'm going to be speaking at the Wealth 365 Summit. There's going to be 6 days of training and over 60 different speakers. So I just want to show you very quickly what that looks like, and I'd love to see you take advantage of that. It's the largest online conference in the world. So you can actually get the link to subscribe to that. It's free. Just sign up. The link is in the description below the video. I think it'll be very much worth your time. So I want to work our way over into the game plan that we created last Tuesday and how we're going to do the same thing heading into this week. Which means that we have to head on over and take a look at sector rotation and the market. So this is what we had last week. And if you remember last week, we lined it up with the opening price on Monday. And we were super clear that we believed that the bad news was kind of priced in. And we said that as long as we're above the opening price for the start of the week, we'd be looking to be a buyer. Now, What's critical about that, and I think this is probably one of the parts of trading that a lot of people get messed up on or confused, is that chart reading and trading are not the same thing. I just can't express that strongly enough. Looking for patterns is not the same thing as looking for money. When you're looking for money, you're setting up the probabilities of whether your profit target's going to be hit versus your stop loss. So we had that last week, right? And we were kind of fortunate, and you could see here that once the market opened on Tuesday, we pretty much traded above the opening price the entire week. And we kind of, I'm not going to say we got lucky. We made our call, right? We decided what was going to happen in our mind based on our mapping out our game plan. And then we acted on that. And our community was very, very aggressive with trading on the bullish side of things last week. The challenge that we had was in the middle of the day. There was quite a bit of non-action. So you really had to be disciplined last week. But here's the thing that I want to get across, and I just can't say this strongly enough. Raise your hand if you hate trading losses, right? I'll raise my hand. We all can't stand trading losses, but you have to recognize that they're a part of the business. But more importantly, when you game plan a certain type of price action that you expect to have happen that day, that you expect to have happen that week, that month, whatever it happens to be, it's critical that you get paid when the game plan that you created unfolds perfectly. So again, last week we talked about it here on YouTube. We did a very deep dive on why I thought the market was going to rally this week, meaning last week. And when that unfolds, you have to make money. I can't say this strongly enough. So many new traders come into our boot camp and they complain, I hate trading losses. The market's overwhelming. The bottom line is it's not the losses that are the problem. The losses are a part of running any business. They call them expenses. It's learning how to make more when the market conditions are really, really lining up in the way that you look at the market, however your edges. It could be a 1 minute chart. It could be a 1 month chart. It doesn't make a difference. When you have perfect and perfect is unfolding in the way that you look at the market, it's critical that you make more on your winning trade. So I'm here to tell you, look, this is all educational videos, and I'm hoping that I'm providing value for you. It's not the losses that matter if you keep your losses reasonable. The next level skill that you need to learn is holding your winning trades longer, which means you need some sort of system for understanding when more money is on the table. And number two, how to hold your profits longer when there's more money on the table. So bringing that over into the sector rotation from last week into this week, you can see that heading today into Monday. Friday was just absolutely amazing. Let me actually zoom that in a little bit for everybody. Friday was absolutely amazing. You could see the month actually start to turn around, and you could see that the last 5 days of trading were pretty darn good. The biggest one that's really taken a hit here is energy, which just absolutely collapsing over the last week or so. You can see they're up just a little bit this morning, and they paused. Energy is actually at a big level right now as well. So one of the biggest things we want to keep in mind is that there's really only two patterns that you really need to know in the market in order to position yourself to have the best chance of making money, which is the market goes into contraction and then the market explodes from that contraction. You can pretty much see that on any chart. And we actually just looked at that on the chart of the XLE, where we had this big expansion in volatility, and then Friday actually paused, which is a pretty interesting thing set up on the market. So now we're looking for an expansion in volatility on that. Now, here's one of the biggest things that you need to pay attention to, because obviously the XLE is pointing down right now, and it looks like it's a no-brainer, sell short looking for it to the downside. But this is what separates chart readers from tape readers leveling all the way up into a trader. So if we take a look at the chart of FCX, okay, Freeport McMoran, and you'd be like, oh my gosh, this thing is going down. There's no support levels. There's plenty of room to the downside, right? Again, this is one of the biggest things that I hope that I'm teaching you when we're doing these stock market lives is it's more than price action. It's more than just what it just recently did. We have to pay attention to the order flow. We have to pay attention to the smart money, how much money they're spending to either dump stocks and unloading that. And you see those shares on the bearish side of things. And then how much is being put into stopping a stock from going down or making it continue to go back up to the upside. So my point is it's critical you have volume on your charts. And we take a look at FCX. This looks like an amazing, amazing move to the downside. But then we add volume into the picture. You can see that Wednesday and Thursday of last week, volume came in super strong and then actually got followed up with what we call a well bid day and follow through. So these are the kind of things that when you're doing your price analysis, remember, it's not a question of whether or not every trade could or should make money. I have losses all the time. It's not a question of the losses. Sometimes you buy a stock, it does exactly what you want. Sometimes you buy stock and it doesn't do what you want. It's putting the pieces together, building the argument. We get questions all the time. What exactly does tape reading mean? Tape reading is not just looking at prices on a chart. It's building the argument for whether or not your profit target has a higher likelihood to be hit versus your stop loss. And that's so much more than the stock. You start out with the market. Are you trading in the same direction of the market? Well, then you got to break that down even further. Are you a day trader or a swing trader? Because that's going to affect which order flow you're looking at. So right now in the big picture of the market, we are rallying in the short term, but we're in the context of this bigger picture move, which is over 2022. So I want to just go over to Apple and take a look at Apple and see where we are in the big picture. The market rarely will move in a big way without this stock actually following through with it. So right now, Apple has had a really clean move off the lows, but we're coming into this level where sellers just keep pounding this thing down. So it's going to be very, very interesting to see whether or not Monday and Tuesday of this week continues to see buying pressure. And as long as it does, I'm going to be on the bullish side of things looking to buy. I also have stocks on the other side of the market to be short selling. So that side of the market, again, the energy side of the market, the basic material side of the market, they have shown some pretty big weakness lately. So matter of fact, the last 2 weeks, very much the same way that last week the market was up, we were looking to be a buyer. Energy stocks have been going down, so I'm looking to be a short seller. Now, here's the thing, and this is the part that I see in the comments that I hope this is going to elevate the way you think. That's my game plan. That is what I am looking to see happen. So if we happen to be looking at the energy sector this week and we're looking for it to continue to go down, if energy breaks out of this and starts to rally, then I'm just going to leave it alone. I need to see what I game plan. And if that happens, I take action. If what I game plan does not take action, does not unfold, then I just leave it alone. Now that's just entering a trade. Now we're going to talk about the other side of the trade, which is exiting. You need to have a line in the sand that tells you this winning trade is still valid in order to hold it. Let's just use something super simple like the previous candle's low. Something as simple as that, where you're just clawing that thing up and you're like, well, it can't be that simple to hold on a good trade. Well, it actually is, because if you take a look at these Chinese electric vehicle stocks, and specifically NIO, which is one that's been on fire for a while, which is up again this morning, we have now had 1, 2, 3, 4, 5, 6, 7, 8. 7 out of the last days, and more specifically from here over the last 5 days, where a lot of people are saying it's overbought, it needs to turn around, it continues to make higher highs and higher lows. This is kind of a shorter term move here, but you get the idea. So what I'm saying here is, as much as we talk about managing the downside, you also have to learn how to manage the upside. And again, the picture that we showed you there before from last week, both here and from here, told you that last week there was buying opportunity. And again, if the market's positive, the major sectors are positive, and hour by hour we're positive, the wrong thing to do is look for it to roll over, because right now in that moment there's buying pressure, which now takes us into this week. We have the 4th of July weekend coming up here in the States, and I know we have a lot of people in other countries. We have also the end of the quarter, which actually somebody in our community brought up last week about the fact that it's the end of the quarter. And would you be selling, if you were a portfolio manager now, into a big rally into the end of the quarter, which is actually going to be boosting your returns for that quarter, or at least improving them maybe from -8 to maybe -3, which makes it look a little bit better. So think about it. Let's say John A., let's use John A. as an example. Let's say John owns a hedge fund and Cynthia owns a hedge fund. Would you be selling heavy right now with the end of the quarter coming up into a 5-day rally, possibly a 10-day, a 7-day rally into the end of the quarter? Probably not. So again, we do these things on a kind of common sense basis. Last week we rallied because the big news was out, right? This week we have the end of the quarter. So we have, what is the actual dates here? We have, I think Thursday is the 1st. So Friday is the 1st. So we have Monday through Thursday ending the quarter. As long as we are maintaining well bid on the daily charts, which again, well bid, if you happen to be a new member to the community here, means that we're looking at higher highs and higher lows. As long as we're seeing that, the right trade is to continue trailing your stop loss up on those winning trades. Now, there's a difference between whether or not those stocks are in bearish order flow but bullish momentum versus they're in bullish order flow and bullish momentum, like a lot of these electric vehicle stocks and a lot of the tangential stuff, such as CHPT and BLNK, which have caught a little bit of a bid. So if you're looking at these guys right now, NEO, XPEV, and LI, which has actually had the strongest relative strength for the entire month of June, then we're starting to take a look at some of the other stuff that also gets affected, which is BLNK and CHPT. So these are starting to put the pieces together to an argument. Now, the big question that we get is these things are up so big, so far to the upside last week. Are they buying opportunities this week? So I want to walk you through something that we do in our community. And again, if you happen to be new to the community, this is actually pretty important, which is this ledger that we put on the top here, which is called a bullish echo. So you can see over here in some of the ideas, bullish echo, right? Accumulation that we just showed you in FCX. You can see Caterpillar, you can see CF and VLO. So what accumulation means, or what bullish echoes mean, is that it's obviously a buying opportunity, but it's too far from the optimal entry to buy right now for a swing trade. So remember, before we choose to take risk, we have to say, if I buy this stock right now, how far has it recently gone? And what's a really good, reasonable chance it's going to move, and how far? So right now in these electric vehicle stocks, they have gone pretty darn far without a pause. And you can see that right here. What we're looking for is something like this, something like a 2 or a 3 day, maybe even a little bit longer pullback. Now, if we use, again, let's just use this one as an example because it's really moved the furthest in the shortest period of time. If we use a simple Fibonacci retracement and even just work our way over here, what we're looking for here is around the 36 level in LI. So now we're talking about it's up at $40 and change. That's almost a $4 pullback before the risk reward makes sense to me. So it's going to open lower this morning. I'll look to day trade the stock long if it meets my day trading criteria. But for me to set up a new swing trade in these electric vehicle stocks, I need for them to pull back a little bit to increase the perceived reward potential. So remember, there's probability of it moving in that favor, and that's the first part of trading. But then the second part of trading is whether or not the time that you're about to hit that buy button, does the reward far outweigh the risk? So there's the probability of it moving in that favor, and then there's the reason you would take the trade, which is there's a good chance of earning reward on that position. So I want to be clear this week. I am going to look to day trade the electric vehicle stocks. But if they start to pull back, I'm not going to short sell them as a day trade. I'm going to look for them to pull back for a couple of days. Now, what group of stocks would I be looking at to be buying this week? And we're going to go over into the bank stocks. I'm going to show you a few of them. But first, I want to point out this article, which is pretty interesting on Seeking Alpha. Meta Platforms shares offer the bargain of the century, and they're using the consensus estimates on earnings at 12 to 13 times expected, which they're saying is a massive, massive bargain. So if we take a look at Meta Platforms and we do a deep dive here and we take a look at the little bit, let's go out to the weekly chart just to really drill this home and take a look at where we are. Now, the next level of significant support is all the way down in this 140 area. Now, obviously, we're talking about down in the pandemic lows over here. Here's the thing about this. Now, just buying this, the same way that high PE stocks are considered to be too high and overvalued, that does not mean that they can't continue to go higher. Just look at so many of the stocks that we had in 2020 and 2021 that were way overvalued. Now, the other side of the market, which is the value investor side of the market, looking at low PE stocks, stocks that have low book value, those kind of things, the Benjamin Graham Intelligent Investor. I think I showed this book to everybody a while back, but this book is actually pretty good. Sven Carlin, he actually has a pretty popular YouTube channel as well. The point that I'm making is just because Meta Platforms has a lower PE right now, that doesn't mean that it's not going to continue to go down. We need to see a significant hook in their new model, which is hardware. Hardware is a very, very different business than just running software, writing code, and having the net profits. So here's really the biggest thing that I want to get across, and whether or not this is actually a statement you could lean on. Here's the big thing that you want to pay attention to. We just talked about earnings per share. We just talked about their business model. All of that interesting, right? What I'm looking for as a longer term play in Meta platforms is their margins. When you start getting into hardware and hard costs that you didn't have before, manufacturing plants, that's going to change your margins. So the big thing going forward, putting into the equation where they are right now from a PE ratio, has to be their margins. So we're going to monitor that as a community, paying attention to Meta margins, and that will determine whether or not a low PE is actually value, or can the company recover and rebrand themselves in a completely different industry. I could tell you as an entrepreneur, you have that online business versus the brick and mortar business where you have these other expenses that you didn't have before. It's very different. It's going to be very interesting. I'm not ready to dive into that yet, but I am going to watch the margins the next earnings call when they come out to see if anything has changed. Okay. The other group of stocks that we want to take a look at is something that we had mentioned last week. We're going to start to take a look at the financials. The financials came off the mat last week, and specifically talking, let me go out to the daily chart here again. They came off the mat, and this guy right here, I want to take a look at. And you can see here, basically, after the stress test came out last week, they really woke up in a big way. You can see the volume expanding here. This is what we call accumulation. Look at the volume here compared to the volume on the way down. The volume in this right here is what we know as accumulation. Now, I know John A. Is here right now, and he spends a lot of time talking about the roadmap that we have, the 4 roadmaps of following the smart money, which is accumulation, a markup, distribution, and a markdown. Accumulation is when a stock has a move to the downside, and then over a period of time, preferably at least a few weeks, but sometimes you could spot it on a shorter time frame, increase in volume, churning where the stock no longer goes down. That's accumulation. So what's happening in that window is smart money is buying after it goes down and it goes sideways. Now, here's the real big part of this, which kind of gets exciting, is smart money is just sitting there on the bid and they're buying, which is why the stock has gone down, but it's also why it's not going up yet. They're buying shares. They're buying shares. Selling is going on because people like us are watching the thing go down. We're selling. But now all of a sudden, they're just sitting there. As long as that selling pressure is heavy, you're going to see it go sideways and you're going to see heavy volume churning. The minute that selling dries up and that person, that smart money who needs more shares, because it's more important for them to get all of the shares than it is to get the exact price, that's when prices will start to go up. So we're actually seeing that here in some of the financials. Look at how light this volume was on the way down, which it should have been heavier. And now we actually see that the volume during this pause into the stress test last week increased. So I'm just going to say it like we did last week, where we kind of, gave the game plan of what we're looking for the week. I am looking for follow through this week after that accumulation in the bank stocks and some other financials, and looking for them to rally this week. As long as they go well bid and remain well bid, and I just want to point out what well bid means. Well bid means that it's going to be higher highs and higher lows on the daily chart. And you can see the room that we have to go up into the 50s. So we should have, provided we rally here, we should have that we're going to actually rally for the next 3 to 5 days. So it's going to be pretty interesting to see whether or not the stress test is news that's out the door now. It's already priced in. Last week we saw accumulation and whether or not they rally. So I'm going to show you the stocks that I'm going to be paying attention to this week on top of the list that I just shared with you a second ago. So I'm going to be looking at Morgan Stanley as well as Citigroup. I'm going to be looking at Wells Fargo, Bank of America, and JP Morgan. Goldman Sachs is kind of the leading stock in that group, but I'm going to be looking more at the banks in that group. So the other side of the market that we want to take a look at is a lot of news coming out this week. Nike has earnings, Walgreens as well. FedEx has an investor conference this week, and there's also a massive amount of news coming out for the entire week. So here's the thing for this coming week. I just can't say this strongly enough that there's going to be volatility this week. There's going to be news this week. There's going to be earnings this week. you have a good game plan for the week. We are looking for the market to remain well bid. We're looking to see, can technology stocks join the rest of the party and stay there? And last week, we also told you about the healthcare stocks. So right now, the healthcare stocks are on fire. Lilly had breakout, J&J. We're going to take a look at those stocks now. These are stocks that are, again, good for short-term trading right now, but need to give us a better risk reward. So I want to point out a few of these. If you happen to be a day trader, you should be able to take advantage of some of these this week as well. So we've been looking at Lilly. Again, relative strength last week. And if you remember, we talked about these. We talked about these actually coming into the week, and they remained on fire for the entire week. So we had Lilly, J&J, and Merck. Those are the three at the top of the list. So again, they're extended. Hopefully you watched last week's video and you joined us in trading these stocks last week. Now this week, they're either breaking out or very far from the optimal entry. So again, I want to be super clear. I get people saying, you said to buy those stocks and they went down on Monday. What I'm telling you is they are extended. So very similar to the Chinese electric vehicle stocks, I'm waiting for them to pause, but they are bullish echoes, which means as long as they are above certain key criteria for day trades, I'm okay with day trading them, but I'd prefer for them to pull back for a couple of days and then look for a new swing trade. So I want to be clear. I am looking to trade as a swing trade this week. I am looking for financials to catch a bid, despite the fact that they don't have perfect order flow. Now, I want to move on over and give you some more ideas for this week, because we're mapping out this current week, which is a full week, but then we're heading into a 3-day weekend and we're ending the quarter. So you might want to write these down, maybe take a screenshot of this for a second. Again, if we take a look at the list here and we work our way over into the top stocks. Now, one of the reasons that we pull these top stocks up, and you can see the size of the list is much bigger than it has been, is we are not only looking for ideas across multiple timeframes, and you can see how strong these have been both over the last 21 days and the last 5 days. So also, this is a big thing to keep in mind as well. When we are talking about stacking the order flow, your objective for the trade has to be factored into that. Are you a day trader? Are you holding stocks for 2 days? Are you holding stocks for the entire month, or until they're still valid? We call that position trading between earnings, right? So what you're going to see on the screen is going to be some ideas that are valid over the last 5 days, some ideas that have been valid over the last 5 days and over the last 21 days. So you need to take this screenshot and figure out which of these ideas. But we're going to break it down a little further. We're going to go down into the sectors and we're going to go down into the groups. When you get pockets of opportunity like that, where all of the stocks in the group, like I just showed you with the financial stocks, you get all of those stocks where money's flowing into or money's flowing out of at the same time. Think about what we said at the beginning of the call. Those are the situations that you need to recognize when you should hold your winning trades longer. It's not hard. It's all in the prep work before the market opens. Okay. So we're going to take a look first at the list of stocks. And you can see here that RBLX is actually number one based on what it did over the last 5 days, which was last week. One other one I want to break down is we're going to go now into the sectors. And we want to break this down and we want to see, are there any dominant ideas last week that are also in this group here? And look at how many technology stocks are in this list over the last 21 days and over the last 5 days. CRWD actually had a nice breakout this week, as well as Zoom, actually. Let's take a look at Zoom. We've been watching Zoom at 115. You can see it finally broke through there and is actually pushing through. Again, if you're a regular viewer of the channel, which I hope that you are, if you're not, please click subscribe. We talked about Zoom several days last week and kept saying it's got to get above 115. It's got to stay above 115. Last week we did. If you missed the entry last week, now you got to let it reset for where the reward potential matches the risk that you're going to need to take on that trade, which is now $8 below where we are right now, because 115 was the level that we mentioned and we kept drawing it on the chart. So now you have a choice. If you're looking to bid into Zoom this week and looking for the next swing trade, you can see that 115 was the level, and right now it's over 123. So that's an $8 risk from there to there. So you either have to wait to get it to pause back in this 115 to 117 area, or you'd have a little bit less share size on your original entry. But more importantly, if we work our way through here, what's interesting about this is consumer cyclical, mostly dominated by these electric vehicle stocks. But what's interesting is they are not dominating this list over the last week, but they are dominating the list from a bigger picture. And you can see that green across the month, the day, and the week. So what I would actually be doing then is I would be breaking this down a little bit deeper and going into consumer cyclical stocks and running scans on this group to find some other ideas. You can see this list of stocks is pretty darn big. Now, one other thing that is pretty important this week is consumer staples. These groups of stocks tend to perform well. Now, they've kind of cooled off a little bit with the market rallying. Tech stocks even rallied. If you take a look at that list again, you'll see that tech was actually at the top of the list. If we zoom it down over here, look at how many tech stocks out of the 29. We actually had 13 out of the 29. So almost 50% of the stocks in this list that meet the criteria are broken down into tech. That's pretty darn interesting. So we're going to have these list of stocks on our watch list here as well. Okay. So there's a ton of stuff to watch this weekend. Moving our way over into consumer staples. One of the most important ones, or I'd say one of the most common ones that we move on over into is Costco. Costco is right at a breakout level that's pretty interesting. It's showing a little bit more relative strength than Walmart. You can see it's actually right at the breakout level. We're looking to see, we're probably going to pop through there. Walmart has a little bit of relative weakness here and not the same strength. One other one that we've been watching is Pepsi, which actually had a nice rally this week as well. So out of all three of those, I'm going to be looking at Costco for a breakout. The other two are showing a little bit of relative weakness. So going forward for this week, I'm looking to see if Costco can punch through, give us some new order flow, and then set up a new trade through those levels. Walmart is still a little beat up since the last earnings. I think the entire market's waiting for that one. If you didn't happen to see the gap down on earnings for Walmart, the last one was over here. It was pretty nasty and really has not recovered since then. You can actually see here as well, the bigger picture list of stocks on the bearish side of things is still quite long. And something also that was pretty interesting here as well is the amount of stocks that traded double normal volume for the week. Again, these are the kind of things that you want to set up. I provide this research for everybody in our boot camp every night, actually, with a video instruction on how to use it. If you ever want to learn about the boot camp, there's a link below. You could click over and find out about that as well. But here's the interesting thing. 69 stocks. Now, the normal number, 68 stocks, excuse me. The normal number of stocks that trade double their normal volume that meet the criteria that I look at every day, normally it's anywhere from 5 to 10 stocks. Today, Friday's price action, it came in at 68. So what does that tell you also about the rally that we had on Friday? Got a little bit of teeth. It's got a little bit of muscle to it right now. And until that price action volume situation changes, I'm still going to be looking to be a buyer. I do have a list of stocks on the short side, but I'm going to be doing what's called hedging, that if the market continues to go higher, the thing that I'm going to be looking to do is paying attention to which stocks are showing relative weakness while the market's going higher. So what I generally do is I put on a small piece on the relatively weak stocks while the market's rallying, get a little bit more aggressive on the longs. If my market analysis tells me that the market is getting weak or rolling over, I will get out of the longs, reduce the positions on the longs, and then add to the short sale ideas, which is this list over here. And you can see that's pretty much dominated by energy or semiconductor stocks right now. AMD was one of the most popular stocks that we've been trading for a while, and that stock has not really found any buyers at all recently. We needed to break this trend that we've seen here now with the selling. I thought over here, this was actually going to be a spot where we're going to be looking to bid for this stock, and just melted with the rest of the market and really hasn't recovered. So what that means right now is semiconductor stocks and chip stocks are showing relative weakness. There's other pockets of opportunity where buying pressure is coming into technology right now, which I actually just showed you. But semiconductors is actually not one of them right now. So there's a ton of stuff to watch. We're looking for follow through in the financials. Also, we're looking for follow through in SQ Square. Remember what I just talked about before. Block Inc. actually is showing some sort of accumulation as well. And we got a couple of days of rallies. So I want to see if we get some follow through on that. So if we take a look at that stock and look over here and zoom this out, you can see on this push down, look at the volume here during this pause, which is roughly about 8 days, compared to this pause where volume dried up and it pushed down again. Heavy volume implies accumulation, which means now that we are looking for this longer term bearish order flow to be broken. So we really need to see SQ get above 75, and then maybe we could take a look at like this really big $50 rally heading in there. So there's a lot to unpack this week. And I just want to say this, and I want to say this in a way that I hope I'm inspiring you, or maybe even getting you a little bit angry. Last week was a great week to trade if you were paying attention to reading the tape and you didn't fight the order flow. We all know that there's a longer term bear market right now. The stock market crash of 2022 is not done. What we're looking at right now is a lot of the bad news is out. Short term bad news is out. That was priced in. We got the rally last week. End of quarter this week, I'm looking for a little bit more follow through this week. Not much, because now we're heading into the end of Q2. All of that being combined, last week there was money on the table. This week we got earnings, we have some more economic catalysts, and we have a holiday coming up. This is going to be another good week of trading. If you did not capitalize on last week's volatility and last week's bullish run, it simply means that you need to really drill down on how you read the tape, understand order flow, and then understand when it's still valid and when it changes. Because look, I'm telling you, there was money to be made last week. It was a really, really good week to trade. Our community had a fantastic week. I think probably NVAX last week, one of the bigger profitable trades for 2 days. Again, only 2 days could make your entire week, even make your month. So I want to throw a challenge out there right now. It's Monday. We're heading into a week where we should have a lot of volatility. If you did not capitalize on trading last week, what's missing? What did you not see that you need to immediately fix so that if this week offers good opportunity again, that you capitalize on it? What did you not see, and what do you need to fix immediately? If you have any questions on how to do that, leave a comment below the video. I'd love to hear from you. I always get back to everybody. If you have any questions about anything we talked about today as well. So just to recap, we're going to be paying attention to financial stocks this week. We're going to be looking for the healthcare stocks to still have some volatility. It's just a question of whether they get follow through. Consumer cyclicals, very, very strong. Consumer staples catching a bid. Basic materials still showing some weakness as well. There's a lot to do. So remember, trading is easy when you're prepared. Use this time between now and the market opening to make your list, have your watch list sorted properly, and go get them. Let's have an awesome week of trading. Having a great day, everybody. Thank you so much for joining me.